testers are going to be your purchases. Because so let's just say I buy 5 lip sensors, right?
It's a deduction.
Yeah.
Okay.
Because I used 4 of them for testers and I kept 1 for myself. So just say this is everything, taking out the 1 that I used for myself. Pretend there's no ending inventory. Get to that total number, and that's what you sold for the year. Does that make sense? What I'm saying?
Mm-hmm.
Because since it's $18.50, all this includes my testers. I'm getting that as a deduction. Cost of goods sold is like the hardest thing, and it sucks doing it on returns too.
So on line 36, you're gonna come up with.
I broke out line 36 into two pieces for you, but it's the same thing because it says it's purchase.
So you'll add it all together.
Yeah, because it's purchases less personal use is going. Well, this is actually all line 36. That makes sense.
So purchases is just gonna be
everything you bought for the year.
everything you bought. That's not including tax or.
You can do. I would do that as a separate line. I would do that as a separate line. Honestly,
Purchase is just the cost of the goods.
of the goods.
So how many total you bought on your.
And then we'll talk about tax and shipping where that's going to go. And then I'm going to do I'm going to write it through for you. So that once you see the whole picture, I think it'll be easier if that kind of makes sense.
So cost of goods would just be percentage of products. So that would be things that we purchase through them, like the little catalog books.
That's supplies. You could put that there too if you wanted to, but I mean it's up to you. If I break out my supplies separately, because I buy supplies not from Synergence too, like my cotton pads and my lip gloss applicators and things like that. And they actually break it out on your invoice, I believe, as supplies separately. Does that make
They
sense?
should, yeah.
So it's part 2 expenses.
Yes.
Okay.
See if I can actually pull my. I should have printed out an invoice for you guys because now they changed the way the invoices looked. I noticed that. I was about to order. I was like, "What is this? This is very weird." Does anyone have questions so far on cost of goods? Are we okay for right now? We're good. Yeah. I don't even know if this is the new one. No, this is the new. Is that the new receipt?
Yes.
Okay. So if we look right here, you have your retail product. And then, so how you would get your purchases, you would take retail product less your discount. And then, because your supplies and testers are actually on this, because your supplies and tester, your supplies per, I say testers, but that's what they, the foundation testers is what Synergence calls it. That is actually something separate and doesn't count on your discount. Does that make sense? I would be taking that number and putting it further into my, on this part 2 of the Schedule C. So if you were to go through all your invoices and add it up and take your total retail product less all the discounts that you got, then that would be your total amount. Does that make sense? Or you could just take the total bottom if you wanted to as well and just put that as purchases as well. But I feel like that gets messy because when you're trying to figure out sales tax, it just depends on what do you want to know from your numbers is the question. For me, I'm so numbers oriented. I need to know how much I've eaten on sales tax, how much I've eaten on shipping, how much I've eaten. That's just me because I'm very OCD and I like to know these things. For people that don't care, you could always just take the total number if you wanted to. So let's just, for easy sakes, you could just take this whole number. Let's just say it was $400. Okay. Let's say that's all of your purchases you made for the year. And then, but $50 of that stuff was for myself. So I'm taking 400 less 50, get me to 350, right? Then I have 2 items left worth $50. That's still sitting at ending inventory at the end of the year. So that means I only sold 300 in the year. Does that make sense? Guys? Yeah. Mm-hmm. And it's okay that you roll your testers in there because your testers are going to be on these invoices because testers are an expense. So you just kind of threw it in cost of goods sold anyways. Good. I'm just making, I was like, because everyone's staring, so I'm just making sure everyone get it or not.
We're all thinking.
Okay. If you have questions, let me know.
I have a question. I don't know how to ask it yet, so I was thinking if I should wait until you get to the next section. But I'm like you. I like to know. I like to break it down. I want to know sales tax paid, all that, finance background. So, when you do it that way, where you just take the total and you throw your testers into purchases, where in the end do you know how much you paid for testers, so you actually haven't made that back in sales profit? It's still sitting there, you have them in hand, you haven't made money off of those.
But it's an expense though.
Right.
It's expensive doing this, so you're wanting to know, I'm kind of
just for your knowledge, where do you keep up with your testers and how much you spend on testers throughout the year?
I know.
Okay.
I just know that I have all the colors. I just average it out. It was like, $12.50 a tube. I don't really care how much I spend in testers because it's already wrapped in and I'm taking that deduction.
Okay.
Does that make sense?
So by leaving them there, you're already taking your deduction.
Yes, because it's all getting rolled into this bottom line. Because then what you're doing, so let's just say, so line 1 is your gross income. So you pull your square, it says you made $7,000 of gross receipts, right? Gross receipts plus sales tax, correct? Then you have to subtract cost of goods sold. That's your deduction. Because the very bottom is your net income, which then gets transferred to the front page of your 1040 and what you're getting taxed on to the IRS. Does that make sense?
Mm-hmm.
I know it's a visual thing, and I'm going to use easier numbers next time. I thought those were easy numbers, but yeah. So you are getting that deduction for your testers when you subtract it here. Every time you subtract is a deduction. Every time you add, it's income. Does that make sense?
Mm-hmm.
Yeah, okay. Yay! So I feel like I explained that better. Because it's so bad because I train people at my job and I was like, when I say it makes sense, it's not because I think you're stupid, it's just that sometimes I talk really fast and I don't know if my brain is catching up to my mouth is the problem. So, okay. So are we good for that part, right, with the gross sales and cost of goods sold? Those are probably the most difficult issues there. Okay. So then everything else after that is pretty self-explanatory. Advertising, that would be like stuff that you paid for your lip sync sheets that I hope you bought from us. Your books, your business cards, things like that. Car and truck expenses. This is the biggest deduction you do not want to miss ever, okay? And I'm going to show you my app that I love this app. It's a free app because I'm not trying to pay monthly fee to track my mileage. It's an app called Everlane.
So number 9, car and truck expenses, that's where you do your mileage?
That's where you do your mileage.
Is also, okay, I have a question real quick.
Okay.
If you get your Cinecar,
Uh-huh.
can you still, like I know they pay you $500, but they don't actually pay it to the lease. They pay you $500, you pay the lease. Can you still
Yes.
write that off? Like
Yes. But it's different because with car and truck expenses, I don't know how lease cars work. You'll have to actually look at that. Like, it actually will tell you, if you look up a Schedule C instruction, they'll tell you exactly how to handle leased cars because usually you're dealing with, like, for me, that's just my car. Does that make sense? Because when Senegence pays you that $500, that's going on your 1099. That's going in your gross income receipt. Oh, that's another thing I should add. So this is your gross receipts from all your product sales because you pulled that from Square, right? Then you've got to add the 1099 that Senegence gave you for your commissions. Yeah, because that is income to you. So when they pay you the $500 for your car, that's compensation to you. That will be added to all of your commission stuff at the end of the year, and then you need to take that deduction down here. Does that make sense? And I think with lease cars, I think you can take like the amount you pay lease, but you can't take mileage because you can't take both. You can't double dip.
yeah.
So I think there's 3 different ways of because I only deal with depreciation which you never want to do depreciation or mileage. So I think in your case you would take the whole cost of the car. Because then it's like a payment that you're making to that. For example, my boyfriend, he takes depreciation on his car because his job is up and down. He's not for sure if he's going to drive a lot for work. He's a landman. So he takes depreciation on the car, and it's basically, you put your whole car in service. It's like, let's say your car's worth $20,000, then you take a chunk of it each year until you get it down to 0. And that's his deduction. But he can take actual costs included with that depreciation. He can take fuel expenses, car maintenance, the interest he pays on the note on his car, things like that. Mileage is always more beneficial just because the mileage rate is like almost 60 cents a mile. Does that make sense? So it just depends. I don't know about the lease cars, but I can look into that for you. Because I do have clients that have that, but I haven't done a 1040 in a while, so.
Because my husband has his own business and they have 2 different trucks. One they keep mileage on, and the other one they were able to write off when they purchased it.
That was probably because he hit a certain weight limit,
Yeah,
and he
that's
179'd it and just wrote it all off.
Yeah.
That's another little. I forgot what they called it, and a lot of oil and gas guys did this. They went and bought the huge trucks. There's little laws for every little thing, and if you decide to go get a Mercedes, there's only so much you can depreciate on that. Because they want it to be where they're making it equitable for all. That's the whole point of the tax code, and that's why people that make more money pay a higher tax income than people that make $15,000. Because it's not fair. Why should they be paying 30% in the same amount as someone that's making $1 million? It's trying to be equitable on both sides. Does that make sense? Okay, so with the app, it's Everlane. Everlance. Yeah, Everlance. It's like a little aqua blue thing. You can pass it around. It's a little aqua blue symbol. It doesn't charge you to do it. It's super, super easy. Because
ERLANC.
Yes. Because some people talk about Mile IQ, and I looked at that. They charge you after you've used. They charge you after you've done so many trips, and that's just I'm like, I'm not charging for you to do that. Like that's. And in the beginning, I was keeping a spreadsheet. And that was a bad idea to keep spreadsheets. This is really easy. So when you go into the app, you set it up, and you can say, I think you set up one like a business, and I put one that's direct sales. So that's me, my Synergence business, and I wish I could pull this up. It runs in the background all the time on your phone. So whenever your phone moves, it tracks where you're going, which is nice. You don't have to open the app to start it. You don't have to open the app to end it. It tracks exactly where you go. And so what you do is that, for example, I'm going to write off, I drove from my church to here. You should write off your mileage that you drove here. Anytime you drive anywhere. If I go meet Jane to go talk about our lip sense sheets, or I'm dropping off product to her, write off that mileage. If you're dropping off something, you write down every single thing that does with your business.
What
period.
if you have a Lucy bag
Uh-huh.
and you go grocery shopping? And somebody, I mean, is that?
Well, technically, if you put those little swatches on your hands and you're going anywhere, you're advertising your business.
It's true. That is very, very true.
And when you go to get
that's what I said to my
Starbucks,
husband.
you hand
It's
out your
like
card,
that.
you
They're gonna
advertised your business. Everywhere you go, technically.
there
you do
is,
right.
but there's you have to understand that there becomes the equitable thing with the IRS. Because I had a girl ask me, she's like, well, I put the Synergence decal on my car and I drive everywhere, so I should write off every single mile. I'm like, you can try to argue with the IRS, it's not gonna work. I actually found it in the publication that said you can't do that. Like, there's actually a blurb that says that does not count. There was actually a court case against it because someone tried to do it. Everyone, and that's like, people try to do it. I think you could value that if you end up selling that collection then. Because then you have now made a timestamp of you making that sale and that trip that you took. Does that make sense? That's what I do. So if I happen to just run into my hair salon real quick because I needed like a product, and then there's a girl like, oh wait, you're the girl that sells lip sense? And I sell it to her, okay, that's gonna go as a, because I sold something. Does that make sense? I would more track it against the sale than
Not
anything
advertising.
else.
More
Yes.
towards sales, not
Yes.
advertising.
So for example, and this is really simple. So since I signed up, one says work and one says personal, all I gotta do is swipe
We're not
left.
selling anything today.
But I came to talk to you guys, and this deals with business, and we're talking business. So that counts. So when I go with her and I go have dinner with her, and I'm talking about how to build her business, how to like make her business and things like that, anything that deals with business, you can write off. If I go have dinner with Sylvia, I'm like, Sylvia, you know what? I don't know how I'm going to generate sales, and she's sitting there trying to give me tips. She can write off that whole dinner. I can write off that whole dinner. We can write off our mileage. Does that make sense? Because we talked about business. That is where people play in the gray a lot. I had to rein my boyfriend in on this because he wants to write off every single meal. He's like, so let's talk about my taxes right now. Because I'm like, we're not going to write off our anniversary dinner because we're talking about taxes. He tries. All the time. He's like, well, I got you that necklace. And I'm like, no, you can't do that. But that's because I don't play in the gray.
Not just IRS reasons.
Yeah.
How romantic.
Yes. That's always his like. He's like, that's why I take you out to dinner so much. And I was like, shut up, you're awful. But so that's just what's super easy. So once you do at the end,
So you swipe it left and then what?
it automatically logs it into your work. And then all you have to do is you hit this little gear, you go to the taxes thing, and I have $729 worth of mileage expenses to take for the year. Put that little number in your mileage box, you're done.
Hello.
Do you know how easy that is? Like, because I was like spreadsheeting, Google mapping, like dropping the pin, like, okay, so I went here, then I went there. It's such a pain. It's so much easier.
And can you backtrack?
Yes,
Like if you haven't been keeping mileage?
you can. This one what I did is I actually put addresses in because I didn't find, because my boyfriend actually went through several apps trying to find the best one. And actually I have him with this app too, because he'll deliver stuff for me, and he keeps track of that, and I'm going to take that as a deduction too because it was my business, even though it was his car, but it's the same thing as if I went to go do it myself, right? But you can backtrack, you can put in like, because it has like, and this is what's really good because it's time stamped, so then I can say, okay, so Sunday on July 31st, where was I at 2 o'clock, and then I remember, okay, it was that client, and there's a point where you can actually like write a note and type in there and say like, I went to go sell something to Sylvia or something like that. Do you need all that documentation? Is the IRS going to ask you for that? No. Maybe if you get audited, yes, but it's up to you if you do that. But it helps because it has like the time sense of when I left the first place and where I arrived, and that helps me remember where I went. I'm really bad about this and only swipe once a week but the problem is with that too, it tracks everything. So when I go from my house to my office every day, it will track